Hi guys, welcome to another daily market forex analysis. Today is the 22nd of November. I'm going to go ahead and mark the charts for DXY dollar index, Euro USD, EURJPY and USDCAD. Those are the three pairs that I monitor every day. So I'm going to go through a quick breakdown of the charts and see if there's any trading opportunities for today. Let's get started. So remember, if you're trading the USD pairs, for example Euro USD or GBP USD, you always want to look at the dollar index first, DXY. So you always start on the weekly time frame. You can see these blue lines in my previous video. I've shown you how to draw them. This is where your weekly support is here, and here's your weekly resistance. So price always moves between support and resistance. You can see previously rejected the resistance, moved all the way down to support, and then it back to resistance and back to support, and then most recently, since the Trump election, you can see that DXY has been massively bullish. It's gone from one support resistance level all the way to the next. So as you can see, price is at the weekly support level. We can expect, today is the Friday anyway, so when price closes today, you will expect it to potentially be a candle wick here, so rejection of buy to push the price further. From next week, I expect the price to move down further, again to this resistance, this support level here. However, there's also a chance where it could breach and make a higher low and go towards the next resistance level. We'll have to wait and see how it plays out. If you go to the daily time frame, you can see price has been bullish. It made a high low here. Prices continue to be bullish again. I expect, obviously today's candle won't close till 10 o'clock today, but I expect there to be a massive wick by the time this closes. Rejection of buys to push the price up, and also it will respect this weekly trend line, weekly resistance as well, but we'll have to wait and see how it plays out. It could also close where the body of the candle finishes like that, and then next week it could make a higher low on a weekly time frame before it goes further up. But yeah, it's interesting. We'll have to wait and see how it plays out on the daily time frame. So this would be your potentially new daily resistance. This would be your new daily support. Why is this support? Because it made a high low, price change from bearish to bullish. If you go to a H4 time frame, prices currently, this would be your most recent daily resistance and also your H4 resistance as well. This would be your most recent H4 support level here. So as you can see, price is moving from one support level to another. Obviously you've got this weekly resistance here as well, which it may respect, but we won't know that till this daily candle closes. So it could either move in between here for today. There's only a couple of hours left. It is midday during London session, so there's still 4 hours to go, or it could slightly reject it and go down to this level. We'll have to see how it plays out. But that's my analysis on the DXY. So at the moment I expect a rejection to go down today. So if DXY is going down, that means the Euro USD and GBP pairs are going up, so we could expect potential buy trades on a smaller time frame today. If we go to Euro USD, start on the weekly time frame. Remember, there's a negative correlation between DXY and the Euro USD. So remember, DXY was at a weekly resistance, which means Euro USD is at a weekly support. You can see it's at a weekly support here. It's respected it here. It's respected it here. There's a large wick here, and also here. So you can see that it's continued to respect it since May 2022. As I was saying, DXY we expect a reversal, so it to come back. We expect it eventually to go back down to this level, which means on a weekly we expect the DXY to go up from this level, but it slightly broke through it. We'll have to wait and see how it plays out, because remember, it could also go back, it could also go further down to this weekly level here. So we'll have to wait and see how it plays out, because today is a Friday, so there might not be much liquidity in the market. Friday is relatively quiet. If we go to the daily time frame on the Euro USD, you can see, similar to the DXY, there's a large rejection of sellers to push the price down. If we update the levels, this would be your daily resistance. This is where price change from bullish to bearish. If we go to a smaller time frame, H4, the H4 zones are in yellow, so we could make this a H4 support, and this would be your H4 resistance, which would be just here where the last lower high was. If we go to the H1 time frame, which is your intraday trading time frame, what you would do before London session opens is get the Fibonacci retracement tool. Look at this as today's price action. You can see this by the breakers I've installed. So this breaker is for yesterday between these two. So you get it from the high the previous day to the low. So we'll get it for Thursday's price action, Thursday's high to Thursday's low. These would be your intraday trading levels before London session opened at 8 o'clock this morning. And as you can see, if I was trading early this morning, I was in a meeting so I couldn't do the charts earlier. You could see it potentially could take a sell trade here, and price has gone to the minus 61 Fibonacci. So let's just say if you did take a trade early this morning, stop loss around 10 pips, 8 pips, TP would be the minus 61. You could have made 50 pips. So if you trade £1 a pip, that is £500 you could have made. Risking £85 to win £500. And if I show you on a smaller time frame, you could have entered on this bearish candlestick here, this one there, and as you can see, price went all the way to this level here. Obviously it's gone down further, but this level is unknown. We don't know this because I've just marked it now. But you could have made quick 50 pips this morning. So, but now, as you can see, price has gone further down to this region here, and you'll see this massive wick which shows a rejection of sellers to push the price down. Buyers are pushing the price up. So if we update the Fibonacci retracement levels, these are your levels at 8 o'clock this morning. Obviously price made a new low. We'd get this Fibonacci tool and we'll drag it all the way down. So now this is your intraday resistance, intraday support. If I'm looking for a buy trade today, that's if DXY goes down, this would be your trade setup. I always try and risk 10 pips. So if you're risking 10 pips to take a trade entry here, obviously you could pull back further, and your TP is, just say, the weekly resistance. So even here, the 61 Fibonacci, I'm risking 10 pips to win 130. That's a risk to reward ratio of 12. So I'm going to leave this as it is. If price does come down further and then make a double bottom and go up, I would look to enter a trade somewhere around here for a buy trade, but we'll have to wait and see. It might not come, it might not go up. But that's my trade setup for today. We'll see how that plays out. Obviously I've still got 4 or 5 hours to go for London session. If we go to EJ, start on the weekly time frame, you can see that price in between the weekly resistance and weekly support. Price is currently bearish. We expect it to move downwards to this level here. If we go to a daily time frame, you can see that it made a higher high here, and then it made a lower low, lower high, lower low, lower high. It's currently making a lower low. So price is in a downward trend. We can see that it's breached this daily support, so it would go to this level here now. Price is going to this level. If you go to the H4 time frame, price has breached this daily. It's now going to this level here. As you can see, the Fibonacci, it's respected it to the T. I'll break that down and show you how accurate it is. If we go, this is now a H4 time frame. So as you can see, this is our most recent resistance. and this level is our most recent support level here. Price has breached it and gone down further. I'll show you now how I did the Fibonacci for yesterday. So if I go to H1 time frame, if you look at this analysis, I'll get rid of this. This is what I did the previous day's price action, or even on Wednesday. I got the Fibonacci retracement tool from the high the previous day to the low. Look, this is your 100%, this is your 0. This tells you if price fulfills this Fibonacci, it could retrace to any of these levels. So it could minus 61 would have been a good retracement, because you can see there's a resistance level here, where with technical analysis you always look to the left, you always look at the price history. It could have gone here and you could have took a sell trade for it to gone down. A better retracement would have been 78.6, and the best of the best retracement would have been a 100% retracement, where it went all the way back to the 100%, and then you could have took a sell trade again to go down. In this case it didn't do that. So if you have a look at the Fibonacci, it tells you price could retrace from the 0%. It could also breach it, which it did here, and it went to the minus 23. So remember, this price action is unknown. We don't know where price is going to go when it's here. It could either go back up to this level, or it could go to this level here. So remember, this is why I use Fibonacci tool. So let's say, I'll show you. Delete the Fibonacci, this one here, get it from the previous price action, which was here. I'd already this Fibonacci set up from yesterday. I didn't change it, as you could see when I loaded up this chart. And look how accurate the price action is. It's gone from the 0%, it's gone down to minus 23. It's retested the daily support, which now acts as resistance, as well as the H4 support, now acting as resistance, and then it's gone down here. Look at that, how accurate it is. And if I show you the risk to reward management tool, if you did enter a trade on this candlestick, stop loss would be just above. TP, you're risking 43 pips. I'll show you on a smaller time frame. So if you entered on this candlestick here, realistically that would have been a good candlestick to move on. Stop loss just above. TP would have been here. You're risking £351 if you're trading £1 a pip to make 1,296. So that's a risk to reward ratio 3.9. So again, that's another trade I missed this morning. I just didn't have the time to go on the charts. Look, that was an 8:31 trade when London session opened. That would have been a very good trade to be in. Unfortunately, I've missed that trade. So that's two trades. I missed 50 pips on EURUSD. I missed 130 pips on EJ. Now let's have a look at USDCAD. You can see this is a trade that I had yesterday. I entered and I made 50 pips, £500. Let me delete that. So if I go to the daily time frame, price is currently making a high low on a daily. You can see it made a high low here. It's a bullish price action today. It's looking to go from this support to this resistance here. That's the analysis that we've done on the daily, so we know there's buy trades today. If we go to a H4 time frame, you can see price already between the resistance, which is where it made a low high, and the support region here in yellow, where it made a lower low. So price can continue to move between these two levels, which it is doing so. So those H4 levels are fine, I don't need to update them. Then you go to a daily H1 intraday trading level. So these are your intraday time frames. So you can see previously this was my H1 resistance and this was my H1 support. So when price comes to this level here, we can do a buy trade and expect it to go up. So this morning, if I update the fib, this is your H4. So what we could do is we could update this. So this is all the H4 level. This is the daily support region. If we go to H1, so before London session opened, these would have been your levels. That because it's the high the previous day, the highest price action, and this is the low. So these would have been your levels before, and as you can see, price breached this at 9 o'clock. It breached the resistance. It can now act as support. So if you wanted to take a buy trade, you can still take a buy trade now. I'll show you why. If you want to take a buy trade early this morning, you could have done here. You can see price has retraced and come back down. Price is now respecting this support region, resistance, which now is acting as support. Remember, we said on a daily time frame, price is bullish. You could enter a buy trade where this would be your stop loss. So you're risking 14 pips to win 33. That's a risk to reward ratio 2.34. I'm now going to enter this trade on MetaTrader, which you can download on your iPhone or Android. You can also break it down further. So if I go to M15 time frame, I can get a more accurate candle. You can see that as a rejection of sellers, so it might actually come back down further. So I'm not going to enter right now. I'm going to wait and see how this pulls back. Once it comes to this region here, I'd look for a buy trade, and this would be my trade setup as so. So that's how I would trade USDCAD for today. But anyway guys, I hope you enjoyed this analysis. I'll just go and update the Fibonacci tool for today. If you like the analysis, like, share and subscribe. Thank you. Welcome.